So unless we have a really strong rally here in the last 10 minutes, then the market will not get to 6,400 today. We got close, but we won't get to 6,400. However, we did get a new all-time high. So this blue line is the all-time high, and we broke above that, and we're on our way to 6,400. Let me pull up the daily chart. This is what we've looked like. Tariff sell-off. VIX got to above 35. A lot of buying came in after the VIX got above 35. Positive tariff news, and then we've rallied ever since then. Thinking about what's next, and this blue line is the previous highs from over here. And look what we've done. We broke above it. We came back and tested it several times, and now we're starting to move higher. Bigger picture, we might be looking at for there to be a larger measured move up like this. This is just kind of drawn on one of the obvious measured moves. So from the high to then the low of that tariff news, and now we're breaking above that. And that measured move puts us up around 7,700. Now, obviously, it's going to take some time to get up there. I wouldn't expect it to get up there like this year. But, when the market is at all-time highs like this and you're trying to find targets, then this is one way to do that. Everyone is going to be aware of this. Every computer, every trader, everyone that looks at this is going to be aware that we had this pullback, and then that measured move leads up to there. So one day when we do get up there, don't forget about that level. That's going to be a very clear target. Possibly as we get close to it, the market might pretty quickly move up to it. And, depending on the context then, it might be going too far, and then it might find resistance at that level. But, we'll need to get closer to that to figure that out. But we are above the all-time highs, and we had tested it several times, and now we're continuing this bull trend up. Now, I think the incorrect way to look at these situations is to think the market's gone too far. It's time to sell. The market can actually go much farther than you would ever think. So it's not time to sell. What I'm doing, I'm just holding long. I'm not selling. I'm going to continue to be long. There's been a lot of bullishness, and that will probably continue to happen. Looking at the 5-minute chart, we had some news today. It was some tariff news. It was the United States and the European Union came to an agreement on tariffs, and you can tell the tariff news is starting to clear up some. The tariff news just isn't as impactful as it was. We got positive tariff news, and the market went up 20 points, and then it actually pulled back about half of that. That's different from a few months ago. Whenever we got tariff news, the market might move 100 points or 200 points based on tariff news. So we're hopefully near the end of where tariff news is really impactful. So some of the trades today, market gapped up and sold off, came back and tested the moving average. This open looked fairly similar to a day we had last week, which is this day here. Market was pulling back to the moving average here, and then ended up double bottoming and then going higher from there. So, and that is one thing I like to do a lot, is look at references from prior days. Find whatever kind of pattern is setting up on your current chart. Try to look at past days and see if there's something similar, and that'll often give you a pretty good idea of what's going to happen next. So the market pulled back, double bottomed, and so I'll mark this here, but I want to preface that this would be a swing trade. So I would not want to buy above this and try to get a 5-point scalp out of it. Although I don't think that'd be bad, I think if you're buying here, you need to try to do a swing trade instead. So try to be buying there and trying to go for at least 2 times your risk. And that's because of just the nature of the setup. You're getting a possible opening reversal which might end up being the low of the day. And then you're getting a double bottom at the moving average. And then you're getting consecutive bull bars. So this needs to be a swing trade instead of a scalp, because there's, it's the open, so there's lots of reversals happening. So your odds go down. But then if you're right, then you have a pretty large profit potential. So to take advantage of that, then you want to go for a swing trade. Market tries to pull back again, but can't, and it stays above the moving average. And I'm going to put it on the right side of my chart here, and I'm going to point something out that I was thinking. So clearly, after this, the market went up. One idea that I was having right at this moment was that this might be a bear flag in what is a bear move. So I'll draw it on. So the first few bars, the market sold off. Then we had a little bit of a rally here. And what this is looking to me like, it possibly might end up getting a second leg down, where we end up coming down and testing the 200 moving average, testing yesterday's close. So when I'm looking at this pullback, I'm thinking this might be a pullback in a bear move. And if it goes above this bar, that might be near the top of this pullback, and then we would head lower from there. So I actually sold above this bar. I'll just use a 3-point stop, and then try to go for a swing trade and get down here. So that's kind of an example of a discretionary trade. It's something that doesn't have a real clear setup that you are able to repeat every day. But it's something that, through experience, I can look at and say, the market is likely to have this outcome, and I can structure a trade that we could take advantage of that outcome. So, risking 3 points, it's not risking too much. But possibly this is the high of this bull move up, and then we're going to reverse soon. And if we do, we're probably coming down to test yesterday's close. And so in this case, I was wrong, and the market, did end up having that bull day. So the next buy I have is marked here. And, especially with that idea of like, this might be the top of the move. And then when I start to see more bull bars pile on, that tells me that that idea is probably wrong. And if it's wrong, it might shoot up pretty quickly from here. So I like that. I like the idea of buying here. It's not too big of a bar. We've been holding above the moving average, 5 consecutive bull bars. So I think that was reasonable to get long there. Another pullback to the moving average. Once again, bull bar to try to buy above, holding above the moving average. And if you do buy above that bar, you probably just exit below this bear bar here and take a small loss. And I think that's the way to manage a lot of these trades, is if you're getting some disappointment, like if you buy here and you get a bear bar, just go ahead and take your small loss there. You'll take a couple points of a loss, and then you can live to keep on trading. So we had a few losers through here, but then finally you get your breakout that you've been trying to get. So you buy here, and then from there, coincidentally, that was also the tariff news. But either way, this was a good place to try to be buying. And it's a type of a wedge. You can see the market's moving up, the lows are getting higher, and then the highs up here, they're kind of at this resistance level. And I like to try to buy in areas like this because you often see a pretty quick pop. So if you're right, it'll often pretty quickly move up. And that was kind of the idea of all these buys through here as well. The bears are trying to go lower several times, but they can't. And we're above the moving average. So eventually they give up. And so here they gave up. And coincidentally, there was also some tariff news with that. We got the tariff news, market pulled back. There's a wedge bottom, and I don't have this marked for a scalp, but this would be fine for a swing. So I'll mark this for a swing. 3 pushes, 3 pushes down, first, second, third. then a bull bar at the moving average. Odds aren't too great because you possibly failed to go above these levels, the all-time high and then the overnight high. So you're possibly failing to break out above these, but it also might be a breakout pullback. And then if that is just a pullback in a bull move, this is probably going to be the low of the move. So buying there for a swing makes a lot of sense. I think for the scalp, your probability isn't high enough, but for the swing trade, I think your potential for a large reward is high enough that a swing trade would work out. Market moves a little bit higher, pulls back to the moving average. Once again, cannot get below the moving average. So look at all these tests we've had today. Market just stayed above it. I mean, almost the whole day. And so actually the buy I wanted to mark was here above this bull bar. So we've gotten 4 bull bars, and we're kind of entering the area where, kind of like down here, the bears are starting to lose control, and they're starting to exit. So once again here, now the bulls had 4 bull bars, and so a lot of the bears will start to exit there, and then they rush out, and then you can get your scalp. And that's all that we have marked. The day still has it's 3:58 as I'm looking at it, and so then there's 15 more minutes until the futures actually close. So yeah, in the last few minutes here, it could get up to 6,400. Looks like it wants to. So yeah, another bull day. When the daily chart looks like this, you should spend most of your time buying. So if you're trading on a daily chart, most of the trades you should take should be buys. Really, if you want a simple rule, if you see the market like this, staying steady above the moving average, only buy. If you're trading on an hourly chart or a 5-minute chart, the lower time frame you go, the more shorts you can take. But in general, you should be taking more buys than shorts. Like today, for example, it was above the moving average the whole day. And what do we have marked? We only have buys marked. So one simple thing you can do is stay on the right side of the market. If it's doing something, AKA if it's above the moving average, just stick to buying. And that's going to make your winners better. And then it's going to reduce the amount of losers you have. So that's a very simple rule that you can apply today and improve your trading. Thank you guys for watching. Okay, so we just hit so in that last moment, we just hit the 6,400, and you'll see that so often. So it hit it at right at 4 o'clock, it jumped up to the 6,400 level, and you'll see that so often, not only on like the daily chart like this, where in the last moment it rushes up to some price, but on any time frame, like on a 5-minute chart, it'll on a 5-minute bar, it'll do that as well. In that last few seconds of a 5-minute bar, it'll rush to something. And just like here in the last few minutes of the daily chart, it rushes up to that 6,400. And so it tested it right as the day, as the 4 o'clock time ended. So, that's just an interesting thing to point out. So yeah, we'll see if we can keep up the buying. I think in general, for the next few weeks, few months, we will keep up the buying, with occasional pullbacks. So that should be good news for everyone holding long. All right. Thank you guys. See ya.